Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hold on, the microphone is kind of like, I don't like where it's sitting here. The kids were messing around in my office yesterday, so a couple of things are maybe a little bit off. Ooh, do we need to reset my audio here? There we go. Okay, everybody can hear it. Well, we got some things to talk about. Playing Minecraft all night. Yeah, they were playing Minecraft. I was watching I wanted to watch the hockey game, so I put Minecraft on and just left them to it, and they moved a bunch of icons around on the desktop and stuff like that. So I kind of regret doing it, but it wasn't too bad. It survived. I've tried to make my office bulletproof. It's doing pretty okay. All right, so we got a lot of things to talk about. We did have some firmer action in the treasuries in the overnight. I don't know if there seems to be some movement in the dollar and so forth. So I think that may be more related to that. Plus there was elections yesterday. I don't think anything to do with that though. But then we got the ADP news and it looks like the treasuries are down. So the ADP must have been good. Here we got the S&P 500 also selling off overnight. So some of this action is concerning. Yeah. Because, we had a big down move overnight. They tried to buy it up. And then they got crushed by the end of the day. So yesterday was an attempted turnaround in the S&P 500 that failed. But now we're getting a rally here. Perhaps because they're thinking, oh, maybe employment isn't quite so bad after all. I still expect the November and December numbers, if we were to get them, like maybe Democrats cave on the shutdown, I would expect them to be pretty bad. But maybe the market is saying maybe they're not as bad as we thought. Oil still in a range. Gold and silver seem to be holding this area pretty well. Copper seems to have found a base after a decent leg there down. Japanese yen. Well, after having a little bit of a reprieve in the Japanese yen, it looks like they're on the down foot again. And the dollar is above 100. Now, above 100, maybe some of the buying kind of levels off. It is this rally in the dollar is really pretty wild, to be honest with you. Okay, we can come and look at it. Oh no, maybe I don't have it on the daily chart. Well, anyways, trust me, it's a pretty massive move. Okay, anyways, and then we got Bitcoin. Bitcoin crashing a little bit further yesterday, but bouncing at 100,000. Okay. Oh, I wasn't even showing you the chart there for a second. Bitcoin, a little bit lower. Japanese yen, dollar. Cool. Okay, Uzi says, I kept hearing they'll cave on it after the elections, but I'm unsure whether or not the results will actually embolden them. Yes. So we did get some movement yesterday, though. There was some negotiations and talks and rumors and so forth that do suggest that there are some Democrats that are ready to cave. So it may well happen. But I think that you are right in that election results last night, granted, I don't think that anything happened in the elections last night that was terribly surprising. But you've got like three. Well, there was that initiative in California, of course, that passed, so they're going to gerrymander California even harder. And then we had New York, of course. Then there was another election, was it in Michigan? I can't quite recall. Where they elected a Somali guy. Trump tells Republicans it's a mistake not to end the filibuster. Yeah, well, he's been saying that like all week. He's been saying, don't just end the filibuster for, to get open the government, end the filibuster completely and pass legislation. Yep. I don't know. Maybe the world would be better without the filibuster, but without the filibuster, there would be a lot of volatility in U.S. politics. I think, given the way that things have gone and everything, Republicans are probably pretty safe for the near future in the Senate. So maybe we could deal without the filibuster, but the first thing the Democrats would do, and the pendulum is kind of swinging their way, and if you do that, I think it would probably swing even harder towards Democrats, is they would pack the Supreme Court. I suppose I'm not as interested in that particular subject just because, I want to know like what will happen, and if that does happen, what would then be the further consequences, And I'm not really sure what would happen if we did that. There's too many unknowns down that path. Did you miss the giveaway? No, you didn't miss the giveaway. I'm giving away a free 2-week trial with my indicator suite. You can go over to speculatorseth.com and download it today for NinjaTrader 8. I think that Democrats on the far left have felt emboldened for a while. It's kind of funny. Like, the Democrat polling is completely in the dumps, especially amongst the kind of like moderate middle class voters. They need to win elections. And people on the left are not acting like that. They think that like the momentum is on their side and that they're making a shift. And nowhere is that better represented than with Zohran. I have to have his name up there to say it right, but Mamdani, the victory in New York. Now, most of the stuff that I see on social media about this race in New York is just apocalyptic. Like last night, Donald Trump was tweeting, "and so it begins." And I'm like, what the heck? He could be talking about anything. But I think that he's just talking about that Mamdani won in New York and that it's going to be a disaster. I'm not entirely convinced that it's going to be a disaster just because the mayor can't do that much. I mean, is he that much worse than who was the guy that they had in there before? Let me pull up a list here. De Blasio. Like de Blasio definitely hurt New York, I think. But it wasn't the end of the world. People barely noticed, and it wasn't until like after the pandemic and we had this crime spree and all of these sorts of things that people were like, hey, wait a second. Right? People have been leaving, but that was happening anyways, you know? So I don't know if Mamdani winning actually moves the needle on anything. But probably what it does do is he's going to try certain things that just like aren't going to work, right? So I think that this is another case. I tell you what, man, and I'm always kind of on this side. I've seen it happen too many times. When the extremists get in power, it almost always works against them. Because as soon as they're in, people realize why you don't want them in. And they move in a different direction. It's really bizarre to me because the whole thing with the social democrats is they're supposed to be like, well, they still believe in Democrats and they still think that you should have a free market, but that you should also have like strong social protections and strong social programs. Like they're really social democrats in the United States is really about that they want a social health. Forget that the social healthcare systems around the world, particularly in the UK and Canada, are like complete disasters right now. But that's what they want. But for some reason, the social democrats, at least in the United States, always seem to veer off into full-on communism. Like, let's start a city grocery store. Right? Like, okay. He'll shift focus to Trump and assorted identity politics as distractions from broken. You know, actually, I think that's a pretty good theory. Like, he can't really do anything in there, but he can shift things to Trump. He can build his political base and then run for a larger office later. Like, don't do anything crazy now so that you can become governor or make a presidential run later. Sure. Let's see that. Oh, I need to recenter mine. That's exactly what the dude in Chicago does, yeah. Here's the thing. Both Democrats and Republicans believe things that are stupid economically. Like Republicans, they want a return to a gold standard. Okay, that's dumb. The money supply has to adjust with the conditions. If you don't, you can end up in like a perpetual depression. Yeah, money supply is a good change You could not move back to a gold standard or a commodity-based currency. It's a dumb idea. Okay. But Democrats have gone down this path that, like, we should just get rid of the market altogether. Right? Which is a way more stupid position than we should move to a gold standard. Because the entire prosperity of the West is almost solely because of the development of financial markets. That's the thing that has made our society so successful, is the realization that the market is the only way to satisfy the competing interests of supply and demand. You have to collect all of the information into one spot, and there needs to be an incentive to collect all of that information into one spot. Once you have all of that information in one spot in the form of price and all of the transactions, then there's lots of things that you can do. Then you as a government can come in and you can say, well, there is a structural imbalance in the market that we need to address, and we can make laws and legislation. We can do agent-based modeling to see how those changes will play out, and we can kind of slowly adjust things as we move along. But you have to have a market. And the left keeps going between these two extremes. One extreme is that the market is a giant scam. It's all just class warfare disguised to keep the working class down. Or the market is absolutely perfect and correct in everything, and we should just always do what the market wants, right? That's what the liberal tech bros kind of think, is that they just do whatever makes the most money. The market's always right. You got those two extremes. They're both wrong. You have to have a market, but the market isn't perfectly efficient. So you still have to come in and occasionally make structural changes to it, rescue the market when it explodes, because it has a tendency to do that, etc., etc. And that essentially is where we're at. Now, the Republicans on that side, I think they understand that you need a market, but they think that the market should be completely unrestricted. So that's your problem there. But basically, we keep oscillating between these two extremes, and I think that the biggest failure that we have made in our day is not teaching our kids the necessity of a market, why the market works. We told them that it's because it makes people productive. It forces people to work, because otherwise everybody will just be lazy. But that's not it. That's not it. It's actually not that big of a problem to get people engaged and working hard, especially in America, because we've always kind of taught that value. But the truth is that if you put people in the right environment, people love to work. It sucks sitting home all day and not doing anything, or watching TV. If you actually had all of the time that you wanted to do your leisurely activities, about a month of it and you'd be done with it. People naturally want to find a role within their community and fill that role. And when they feel like that they're contributing to that community and that they're doing work, that's where you get people that are the happiest. And it's not even necessarily that hard to do. And yet our society, because we basically say the market is always right, make the most money all the time, our society struggles to do that. We have a hard time giving people that community and that place, because we need to make money. So we're just going to lay them all off. Right. And right then and there, you've poisoned the well. Now, forever after that, they remember that. They know that their job is never safe, that they really don't have a stable place in this community, that they are forever nomad in this economic wasteland. That's what we've kind of turned it into, right? So the idea that capitalism is like forces people to be productive, it's actually the opposite. You go and you look at communist economies, a lot of, especially the working class people, were very, very engaged. communists worked very, very hard. They did. It's just it never went anywhere because they had no way. They didn't have the information to collect all the information together to say what the supply and demand was, to know that, oh, we don't need to make as many of these things and we need to make more of these things. That's why we've been successful. We didn't teach our kids that. And then they've experienced this thing where it's like, there's this group of people that say, well, the market's always correct about everything, when it so obviously isn't. And the kids can't reconcile those things, essentially. So what do? They just turn against the market completely. They'll send us into another dark age if we don't properly teach the next generation the importance of financial markets. And this isn't like some philosophical thing. Like, no, this is like, there is just massive amounts. Pretty much all of economics is basically showing why you need financial markets. It's just the inescapable conclusion from all of the research. That's why countries like China have moved over to having an economy that is partly market-based. Because it is just undeniable at this point that a market is the only way that you can really satisfy the competing interests of supply and demand. That's what we're facing right now. So I hope we come in here and we look at these things. If they do things to harm the market, or, you know, they chase the rich out of New York City, well, they'll find out. They'll find out. And then the only question is, will everybody else draw the correct conclusions from it and understand that it's because you need a market and not necessarily, you know, other reasons? A lot of this, you know, there's this other issue, which is just class envy, right? Well, I think, and this will probably be an unpopular thing, but I think that allocating capital is hard. I think that having lots of capital and using it responsibly is something that for some reason is extremely difficult to do. There are a lot of very, very rich people that inherited their wealth and they just squander it because they're never able to develop that sense that their parents had to. That happens, right? But you have to have people whose primary job is going out into the market and seeing what we have too much of and what we don't have enough of, and being entrepreneuring individuals and funding to fill those gaps. So it's never going to be equal. There's always going to be a group of people that, because they've been successful in allocating capital, or because they started with a lot of capital and they didn't squander it, is going to do better than everybody else. And those people have a responsibility. Like, if we're going to accept that is a role that has to be played, then those people have a responsibility to actually do that responsibly. I don't feel like that they have done that. I mean, because what happens is they get all of this capital, right? And then they treat everybody else like trash. That's not even like, I don't have a problem. They spend tons of money, like, because listen, if you want to have nice things to exist, then they have to have people buying those nice things. So I'm totally fine. Even if I would never buy a Ferrari, I don't think, but there's nothing wrong with buying a Ferrari if you can afford it, if you have the money, because otherwise Ferraris wouldn't exist. And I think that Ferraris are a cool thing, that they should exist, right? But what's not okay is to go and lay off all of your workers, completely undermine your own company, and destroy that culture and everything, so so that you could buy a Ferrari, right? And that's what I see happening today. Does that make me bitter? A little bit. I think I'm a little bitter about it, to be honest with you. The way that I've seen things go as I've gotten older. But the difference between me and all of these communists out there that basically just want to get revenge on the rich is that I understand what creates wealth. I understand where our prosperity comes from. I understand the importance of a market. So there you go. There's my rant for today. Good stream. Well, we came down to the regular session first kind of line in the sand at 19.5. You know, I never even looked up the ADP. You know what? That's not that. So previous was negative 32. They were expecting 30, and we got 42. So I don't really feel that a 12K change is that good. But I suppose that the amount of the move down was not that dramatic. We are basically right at the volatility projected range for the regular session. So I don't know. Does that mean that I should take the reversal? That I should buy it? I think in this situation, no. Because what do we know? We know that there is an ISM services in an hour. So that might restrict movement. There might be a front running of the ISM, and I'm really not sure how that one will come out. Well, they're looking for a rating of 50.8, and the previous reading was 50. Remember, 50 is like a line between contraction and expansion. So they're expecting slight expansion. I'm not quite sure the way that one's going to go. And if there are some people out there that they know, you probably will see a little bit of a move that could push us through. So I don't feel that the mean reversion trade here makes sense. So glad I gave you something I probably look at forever. Yeah. I think I probably will look at it forever. Yeah. Actually, I don't know if it will be forever. But certainly in this market, or really what it should be is if we were to, take this data series, just the daily percentage number. And it's probably something like if the number is below 5.5, then we care about those a lot. And if it's above it, we don't care about them. Probably. But it might be like this low volatility for a while. Like, to be honest, I definitely see some risk in the market. If the S&P 500 continues this downtrend and it gets to a point where some of these AI things start falling apart. So a lot of people are saying, well, but there's actual earnings behind it and things like that. Yeah, but there's also an insane amount of debt that is supported largely by high asset prices. If the asset prices come down, you could see the whole thing collapse. So, suppressing the volatility is a very, very dangerous thing, because if the volatility spikes, it's really going to decimate the market and destroy a lot of institutions. But after that, I think I still kind of see Treasury volatility coming back down very quickly. So I think I'm seeing potential regime where the low volatility is more useful. Right. And we just got to make sure we're not on the wrong side of it when it explodes. I just feel vengeful today. I feel vengeful today. All this stupid shit that goes all around every day, every freaking day. Idiots on the internet having no clue what they're talking about, saying stupid things. And none of them bothers me more right now than all of those idiot day trade influencers out there with absolutely no clue. Especially those ICT morons. I should make a TikTok today, but like, here's how you should use the fair value gap. Here you go over to speculatorseth.com, download my new version of the indicator suite, slap this fair value gap on here. It shows you all of the gaps and when they've been closed in a way that no other indicator does. It's all written with raw drawing code, so it's very fast and smooth. Okay, so put that on your chart and then completely fucking ignore the gaps because it's a useless indicator. Would work to attract a crowd. What, being more vengeful? Me too, and my wallet hurts. I should just stop. Well, the trading is a different thing, right? Like, trading comes and goes. Here's the thing. You have to have periods where money supply is tight and periods where money supply is easy. We've went through a decade and a half of money supply being easy. Too long. So we built up our economy too much on businesses that require low interest rates to function. Ergo, when we get tight money supply, it's very, very devastating. And you get a very large portion of the economy, all of the tech workers essentially, out of work for years. It's a real nightmare. It's a real nightmare. But you have to have periods where money supply is tight and money supply is easy. And I suppose that that's just the way the world is, and that, you know, make sure that you have that emergency funds, save up, keep debt low. I hope that interest rates come down enough to bring some balance and stability. It would work to attract a crowd by advertising a fair value gap indicator. Yeah. Trading comes and goes, but these idiots multiply. They really do. I think, you know, this is, I think, what bothers me and many other people, I'm sure, about vibe coding. Because the way that I use AI is way, way different from what I read of most people online. Because what most people online want to do is they say, I want my application to do this, this, and this. And then they just want the robot to completely make the whole thing. And they want to be able to make software without having any understanding of the technology behind it whatsoever. And I see a lot of people that they're programmers or they're in the industry or whatever, and they're doing that. They let the robot go off and then they just submit what the robot makes. They don't look at it. They don't seek to understand the code at all. The problem is this failure to understand the fundamentals behind things. People only want the results and not the knowledge necessary to create the results. And when we have so many people going along and doing that, what you end up with is this mass of people with no clue what they're really actually doing, and they do stupid stuff. Yeah. And that is what has happened in the retail day trading space. I mean, that's kind of been the way that it's always been. They don't want to actually understand the market. They don't want to understand what is a limit order, what is a market order, how does the exchange match the orders up. That's a limit order book. What are the mathematical kind of consequences of a limit order book and how that affects the behaviors in the market, and building up their knowledge from there, from the bottom up. They just want the result. They want to make money. Give me some pattern and so I can make the money. And there are plenty of people out there willing to sell so-called strategies to give them the result, even though they're complete scams. Really, what it comes down to is a lack of excellence, right? Kids these days, they don't believe in excellence. They say, oh, it doesn't matter. You don't need to be excellent. It's all fake and gay anyways. And I would say, well, okay, maybe there are some things about the economy right now that kind of suck. There are some things about society that we would maybe wish that we could change. But here's the thing. What if it does change? What if whatever that thing is that you think needs to happen for you to all of a sudden feel engaged in society and now you want to try your hardest? That happens. Then what? I'll tell you what will happen is you'll still be a fucking loser because you've never practiced excellence a single day in your life. The real cost of all of this stuff, offloading it all to AI, not actually understanding things at a deep level. The real cost is you, the person you become. So when that day comes and you actually do care, you'll fall flat on your face because you've never done an excellent thing in your life. You won't have the skills. Manmute says, I think every ICT trader needs to be forced to watch a session with a news squawk at least once. I think that every day trader should have to watch forced to watch a session with a news squawk. But, you know, if we were going, I don't really agree with this kind of idea that like there should be these huge gates to keep people out of things like trading or day trading. Like I think it's ultimately a good thing. I don't think that it was like really a huge thing holding people back because there's other rules like the wash trading rule and stuff like that. But I don't like this pattern day trader rule. Keeping people out based on having a certain account size. Okay. But if there was a gate that we should have for day traders, it should be you have to have a news squawk. If you are trading on an intraday basis and you don't have some form, some method of seeing the news headlines and understanding when a move is being triggered by a news headline, you're just never going to be successful retail day trading. Not in the long run. And it's really quite horrifying to me. Going in every day on Reddit, especially on Reddit, when there's a big news event and seeing somebody say, why did we move at X time? Man. Especially the worst one is when it's a non-farms Friday, right? And somebody's like, well, why did the market move so much here at 6:30 on Friday or 8:30 Eastern time on a Friday? If you don't know why, you shouldn't be trading. Seriously. Wow. It just seems so wild and bonkers to me. But people aren't taught this. I feel like that one of the first things you should be taught when trading is that the non-farms payroll report on the first Friday of every month is one of the biggest, largest market moving events of every month. That should be like day one. There's a lot of retail day traders that don't know this. Sounds like Relaxation says they started programming with BASIC. The one like way back in the day. The way I started programming was TI BASIC on the calculator. That's where I learned to program. And when I did that, I was like, oh, I wish that I had learned this when I was like a little kid, because I had been interested in it the whole time, and I just I always thought I needed to go to school to learn to program. Yeah, it's funny, but so many channels I've personally seen a whole bunch teach to not trade news. I just don't trade news, so I don't have to pay attention to it. Doesn't really matter. Well, I mean, it is a smart thing to know when the news events are happening and just not have positions around those periods so that you avoid the worst volatility. Because especially in futures, a lot of those events will create more volatility than your account can handle, right? But the best opportunities, man, the best opportunities are the ones where there's a news event like that and it trends all day. So you can wait the 5 minutes after the trade and get in and it keeps going. It's kind of hard to tell when that's actually going to happen. But there are certainly some. Every once in a while, you'll see one that comes through that's so significant, you'll just know. You'll just know. I can think of many, many, many. Like, especially the one that sticks out to me the most is that one where we thought that we were going to have a negative jobs report after COVID. And the number came out being, like, massively positive. Like they thought it was going to be like a negative 100K and it was like positive 100K. And that one, like, there was a big jump, yeah, and then it just kind of went sideways until the S&P 500 opened, and then the S&P 500 trended up all day. So that was the easiest trade in the world, and that was a big winner. If a solar flare happened, we're all screwed. Maybe. I wonder, do you think that in like these data centers that there's some level of electromagnetic shielding? I would think that there would have to be. Because that would be pretty nasty if they didn't protect any of that hardware from electromagnetic interference. Like, if it was me, I would be building, like, chicken wire into the shell of the data center. So that the data center is like one giant Faraday cage. In fact, it's not even that hard to make considering it's a non... If I was a hyper rich person, you know, like if I make $1 million from creating a trading platform or something like that, and I build a house, you know, I would like to have the entryway. You come into the entryway. On one side is the living room with like the porcelain, like this thing behind me, baby, hutch, like a porcelain hutch, with all of the nice things in it, and a piano. And then on the other side, there would be an office, and then the office would connect into the computer room. And the office would be a Faraday cage. Solid wood doors, Faraday cage. You go in there. Not that I have any need for a room like that, but it just seems to me like if I was a rich person that that's something you should have. I don't know. Your one room in your house that's basically your skiff. So that's what they call them, right? A lot of military tech is EMP proof. That's oftentimes part of what makes something military grade, which is a meaningless title, meaning cheap is better. Also, fun fact, iPhones are... No, they are not. I thought that the law was that pretty much all processors and so forth have to accept all electromagnetic interference. This is something that, you know, like they will have it like written on the circuit boards or whatever, like that this device must accept all. And I was always like, why is that? Why is that? And I remember there was being some token explanation for why that was the case. But then I read those stories about how the military in Israel has this tech where they can basically shoot a microwave at a processor and change the values in the processor, and that they've used it to do things like assassinate people in cars and stuff. You shoot it at the car, it makes the car go haywire and you crash. Happened. Probably shouldn't talk about those sorts of things. They don't want you to know that. But it's a thing. You need an EMP bag for iPhones, says Man Meat. You can find videos of people completely frying iPhones and then they work. Oh, like putting it in a microwave, maybe? I suppose I could see that, like, I think they still have to accept electromagnetic interference, but they could maybe be able to handle it without getting fried. EMP generators aren't hard to build. Well, yeah, it is. But isn't the way you build an EMP generator like you take apart a microwave and take out the microwave emitter and then change the frequency on it? Something along those lines. By the way, before our news at the top of the hour, do you think that they're going to push this line at 19.5? Because they sure have been, like, nibbling at it for a long time. It's capable of withstanding a nuclear detonation? Wow. Interesting. What was that TV show that, like, the whole premise was that there was an EMP released in the United States, and then, like, nothing in the show really was ever related to that, but the girl was really hot, so people watched it anyways? I remember, I can't even remember the name of the girl. She really fell off. I don't really hear about her anymore. She was really the hot girl before Megan Fox. But anyways, I just remember, like, on the early internet forums, that was, like, they talked about her a lot. Or maybe it was just on my forum. There was one guy that really liked her. Okay, so Uzi says that there is quite a bit hitting into... Oh, yeah, I can see it, actually. Hitting into the offer in ZT. In the 2-year. I do see that. I don't see it, like, reflected in the other treasuries, though. There's an iceberg at 20, though, on the bid, so... So maybe they're going to try a bounce? Maybe the ISM services is going to be really bad. So, I think that I've been pretty okay at predicting, like, the economic numbers, especially the PMIs. I've never really been bold enough to really take a lot of trades off of it. But today, and maybe it's just because the estimate is at 50, but I don't really have a strong feeling either way that it's going to go one way or another. But I think that if I were to take it on, like, a risk-reward basis, I think that the play would be to buy it. I think the play would be to buy it, especially considering the ADP and everything. So since the ADP was slightly positive and we moved down, the thing that would probably disrupt the market, create the most confusion and the most volume and everything, would probably be a services PMI, and especially prices paid, that's really low. like a PMI in contraction, and let's see here, they're looking for a reading of 68, so let's just say that it dropped to 60, something like that. That would probably really prompt strong buying. So I find some of these icebergs and everything a little bit curious because I can't see, maybe it is just for the open, but I can't see a very good reason for large icebergs here. And they seem to be going in different directions depending on which instrument you're looking at. So that would suggest somebody taking up a position on the spreads, right? Now, on the other hand, you know, one of the issues you got to think about with icebergs is like, okay, so if there's an iceberg sell here in ZT, there's somebody that needs to sell a lot, but there's 17,000 worth of people willing to buy into them. So like when it's just an average size one, like a 3K, I kind of think that the market makers kind of go like, well, that guy needs to get filled one way or another, or we're not doing anything until that guy gets filled. So it kind of almost becomes like an impediment to the market, you know? But when you get to the really big ones, there's a certain point at which it's big enough that you kind of have to think, wow, there's large amounts on both sides. And in that case, I would probably rather go with the market orders, because the limit orders, the icebergs, tend to be more passive players. They tend to be like people that are just hedging and so forth. Right? So in this situation, if we were going just off of ZT, right, then I would have to guess that the guy selling on the iceberg is just hedging, and the guys buying with market orders think that they know what the ISM services is going to be. Right? Now that's like, we don't actually know that. That's just kind of like the simplest guess you can make. Right? But then in the 10-year, we see it the other way. So that would mean that now if we were thinking of it as a spread trade, and we were going with the limit orders, then that would mean that they're buying a flattener. So a flattener would not be a positive thing for the upside. So see, I can kind of make the case both ways. But in this situation, because we can kind of see the flows and everything, like when it goes, we'll know. And we can maybe jump on board. So I suppose that something we could do is put a stop limit in here. Let's put it at 22. We'll put a stop limit on the downside too, but I'm a little concerned, like that bid at 19.5 looks a little bit weak, so I don't want that one to be triggered yet. Oh boy. Wall Street Journal says it's time for Wall Street to work with Mamdani. Oh boy. Oh boy. Oh boy. Well, let's read this. This is from Hot Air. The Wall Street Journal reports this morning on the aftermath of the Big Apple fight over socialism, where capital lost. Zohran Mamdani won easily last night, winning an outright majority of ballots cast by New York City voters, 50.6% as of this morning, with 87% of precincts reporting. Andrew Cuomo got 41.7%, while Curtis Sliwa, the only rational candidate still left on the ballot, received 7.1% of the vote. Man, I'm not going to say that Curtis has his issues, okay? Like, I would never, even if he wasn't in New York, he would be a very controversial politician, okay? He was probably not necessarily the best person to pick to go up against Zohran, but I digress. Republicans not going to win there anyways. New York City has chosen socialism, and the Wall Street Journal suggests that capitalists will just have to suck it up. But is that their only option? Quoting from the article, Wall Street heavyweights failed to stop New York City voters from electing a Democratic socialist mayor. Now what? There was an air of defeat on Tuesday evening in New York's upper echelons as it became clear that Zohran Mamdani had won the mayor's race. Some top figures in the city's finance industry found the notion of a Mamdani administration unthinkable and had spent millions to elevate other candidates. Really? Have they really tried that hard? Because I kind of felt like that everybody, when he won the Democrat nomination, that everybody kind of went, well, we're screwed. But apparently some were fighting till the end. Now they have to work with the new mayor and hope that their worst fears about his impact on the city's business climate won't come true. But do they have to work with Mamdani, and is hope their only strategy? They lay out what's coming if Mamdani gets his way. Mamdani, 34 years old, has risen swiftly from an outer borough backbencher in the state assembly to election as the city's chief executive by harnessing the broad unrest many New Yorkers feel about being priced out. He has promised an additional 2% tax on millionaires to raise taxes on businesses to pay for free buses, expanded childcare, and city-run grocery stores. The city-run grocery store idea is one that just really bothers me, because they've tried it haven't they even already tried it in New York, and it's always a complete disaster. Although an extra 2% is not the end of the world. A city-run grocery stores policy has already been tried in various places. They inevitably collapse, a reminder of the lessons of socialism that should have been learned from the Soviet Union. Price controls lead to runs on merchandise and supply interruptions, which leads to empty shelves, while private sector grocery stores exit the market. Get ready for the Big Apple to go from bodegas to food deserts, and for Mamdani to follow the socialist playbook with increasingly authoritarian policies to cover up the inherent failures of socialism. F.A. Hayek astutely explains this cycle in The Road to Serfdom, a book New York City voters should have read before now. Or maybe they should have just checked out how well the government groceries worked out in Kansas City. Remember when Mayor Quentin Lucas found himself a green grocer with $29 million of taxpayer money? Yeah. They spent $29 million, because the whole issue is why do you want to have a neighborhood grocery store? Because you don't like the prices at the market-run grocery stores. So you're going to come in and you're going to run a store with prices below the market price. What will happen is they will buy up all of the supply and there won't be anything left. And all of the other grocery stores will get chased out of the market. It's always a disaster. In New York, it could probably be more like in Kansas City. It's kind of like, who cares? In New York, that could really devastate New York, couldn't it? All right, take a big whiff, New Yorkers, of the stale smell of your future for the next 4 years. That is, the New Yorkers who don't have options elsewhere. That brings us back to the Wall Street Journal's lament. The capital will just have to learn to get along with socialists, but that's only a choice. Capital always has options, and capital can always leave and go where opportunities exist. A former deputy mayor warned the Wall Street Journal about this point. It's about public safety and quality of life more broadly. Those go in the wrong direction, and any employer is going to have a hard time attracting and keeping good people, said Ed Schuyler, an executive at Citigroup, who was a deputy mayor under Mayor Michael Bloomberg. The people that Mamdani plans to soak for his socialist utopian agenda have options because capital markets have options. The financial sector and the stock exchanges moved their annexes out of Chicago this year to Dallas, Texas, where Wall Street has now become fully operational. Yeah, it's true. Wall Street has, like, I wouldn't say that it's big or anything, but like it is a viable alternative down there now. So if New York made the right mistake, you could see that business shift very, very quickly. Can you imagine how jolting and disruptive of a change that would be if all of a sudden Austin, Texas was the financial center of the world instead of New York? Whew. They made that change thanks to the increasingly socialist policies in Chicago under Mayor Brandon Johnson and Illinois Governor J.B. Pritzker, the same disincentives that Mamdani plans to create in New York. Both NYSE and NASDAQ have satellite exchanges on Wall Street, and a new Texas stock exchange for small and mid-cap startups opened earlier this year. Dallas already has the second largest financial sector among American cities, trailing only the Big Apple. The truth that the Wall Street Journal misses is that the capital markets already have one foot outside of New York City, and it will not take much to move their operations, or at least enough of them, to matter, to a much more welcoming tax and regulatory environment in Texas. At a certain point, the employers and employees about whom Schuyler warns will demand an escape from New York. Speaking of which, perhaps Mamdani voters should cast their minds back to that classic film from 1981 when John Carpenter and Kurt Russell made magic in Escape from New York. Have you seen that? I've never seen that movie. It worked because of the decadence, chaos, and failure of the Big Apple that preceded it in the 1960s and 70s, thanks to quasi-socialist policies and bleeding heart approaches to crime. Unhappy days will come again, and this time around, Wall Street has options. They are already exercising them. The crazies are already living in the subways again. Who was that? That was Ed Morrissey. I think he lives in New York. Yeah. I'm going to read something else here to myself real quick. Not worth reading for us. Not relevant to us. Interesting article, but not relevant. Oh, we did make a new low, only by a tick. Big Toasty says hi. Oh, well, good. I'm just a little quiet because, we're preparing for the services PMI news. We're getting a little down move here, though. I think I will move my stop to the VWAP. I don't have a position on, but, if the news comes, it might be interesting to stop into a trade. Do it with a stop limit order, though. Let's see here. My back is hurting a little bit. I'm going to roll my back here, come back. So we're ready for the services number at the top of the hour. I was just looking at an interesting thread on r/orderflow_trading. Why aren't order flow traders winning more? And this guy kind of makes a really odd argument. He's like, they only win 50-60% of the time, which, like, their win rate doesn't matter. But probably most of what is taught out there as order flow is probably just as useless as the price action setups that are out there. You getting a story that they're seeking to end the shutdown? Which source are you getting that from? Because that sounds to me like the story I was reading yesterday. Although, if it was real, or if it was a different one from Punchbowl, okay. I mean, if that was posted in the last 5 minutes, then I think that that's more different. Okay, that was 43 minutes ago. So I think that I was reading stories yesterday that there were some Democrats that were willing to deal. And I think that this is just like further confirmation that they are actually like sending official, this is like a document to have a meeting. Yeah, it's a letter from Jeffries and Schumer to President Trump. We write to demand a bipartisan meeting of legislative leaders to end the GOP's shutdown of the federal government and decisively address the Republican healthcare crisis. Democrats stand ready to meet with you face to face anytime and any place. Thank you for your attention on this, man. Meanwhile, also from Punchbowl, I don't follow this guy. I don't know why I don't. I probably should. Let's add them to a list here. Oops. Add to lists. We'll put them in the traders list. President on last night's election. Last night was not expected to be a victory. I don't think it was good for Republicans. I'm not sure it was good for anybody. But we had an interesting evening and we learned a lot. I will say a few remarks, and then after that, I will ask the press to leave. We'll have a discussion after the press leaves about what last night represented and what we should do about it, and also about the shutdown, how that relates to last night. The shutdown was a big factor negative for the Republicans. He also said the government needs to reopen. We must get the government back open soon and really immediately. Because it seems to me that the government being shut down hurts Republicans the most in its economic impact. Like, we were coming into a time period where we should have expected the economic prospects to get better because the whole craziness that happened over the summer with tariffs was over. And then we got the shutdown. And so one has to wonder if maybe other businesses are holding off on hiring because of the shutdown, and that the shutdown is having a larger cooling effect on the economy than people realize. And that ends up hurting Republicans more simply because Republicans own the economy right now. Although I do not think there is any chance that they will acquiesce to the Democrat demands. The bill that the Democrats were putting out, there's no way. Maybe they make some compromise bill that still ensures that illegal aliens do not get health care, but not the bill that they were putting forward. Okay, so it has been further down here, though. So hard for me to separate out how much of that could be. I don't think, I mean, it's been 45 minutes, so I don't think that could be why we've pushed lower. Pushing lower could be just endogenous, because we had been looking at that 19.5 for a while. I'm actually surprised at the amount of volume that came out here in this area. But I would have to say, if there's front running, maybe it's front running to the downside, right? If that it is what it is. Like if that number comes out and it's better than expected and they push a new low, I would be cautious about that one, because basically when that happens, it's kind of like, you know, they were already short, so they start taking profits, right? So, but they have some room before they get to the second standard deviation on these volatility projected ranges too, right? So I need to make a change to it somehow that basically says if we're above the open, then make sure that the next line is always visible. If we're below, you know, the next line up is always visible. If we're below the open, make sure that the next line down is always open. And if we're below the first line down, then make sure that the second line down is always visible, so that you can always see the line that you would be the most interested in from the scaling. I think we can do that in NinjaTrader. Just have to like overload the auto scale method. Okay, 2 minutes. Wow, hours a minimum wage worker must work per week to cover. Oh, in Utah, it's minimum wage worker. Yeah. Really, what you should do is like bottom quintile of workers instead, because not very many people actually make minimum wage. Okay. 52 spot 4. Oh yeah, you buy that. Okay, I'm gonna try something that I'm not sure that I actually believe in it and is really risky, but I'm gonna give it a try, okay?
Block sell.
Okay. I give myself 3 contracts to work with here. This could be a real disaster for me. Let's see what happens. So my thinking here is we got a 52 versus a 50. I mean, that is better than expected and everything, but I don't know if that really justifies the degree of a move that we saw and the amount of volume that we saw. And we really busted through both of those second levels on the volatility projected range. So I think that the options market makers are really going to be pushing back against this here. So I don't know if I've got the right spot, although so far it seems to be going okay. I might be reaching a little too far on that first order. I maybe should have had to take profit at like 14.5, and then I could have taken more at 13.5. So let's see here. The prices paid was higher than expected, 70 versus 68. That hurts. That probably hurts more than the headline number, frankly. Like, if this doesn't work, the reason why I'm like, I don't believe in this, but I'm trying it and testing out some theories, is because I know if this doesn't work, it's probably going to be a hyper painful trade. Like, I do think that the news is negative and it does justify a repricing in the market lower. Just not as many orders as I saw come out. And again, you did see the front running into it as well. So, like I said, right? Like, if they front run on it, then what they're going to do is they're just going to take profits immediately. So you could get buyers. Well, honestly, I feel more comfortable with my position right now than I think I would if I was short at 14. You know what I mean? You're short at 14, you want it to go lower, and it's like it's stuck and it's not really going. There's an iceberg at 13.5. That's a positive sign. That's in line with what we'd want to see. You're also that's probably the second or third time now that I've seen like a really big hit of market orders come through and it not hold. Like the sellers hit that really hard and it did not give. So that was a good stack on the uptick too, by the way. Okay. I don't like that stack at 15.
Block buy.
Ooh, hey. Okay. That was interesting. Well, I think I want to hold it until the cumulative delta comes all the way back.
Block buy.
The order flow in the 10-year is pretty wild here. We haven't had a fireworks show like this in a long time. I mean, there's a lot of volume on both sides of this, but the kind of like really aggressive orders that come through and are like shove it 2 or 3 ticks at a time, we haven't seen that in a really long time. Okay, there is an iceberg at 15, so I would expect that we would need at least 5,000 contracts to clear. But if they're able to do it, hold it. At that point, then I think that you kind of start to get panic covering. Well, I don't know. Maybe I take that back. Maybe some of those fireworks that we saw already was panic covering, right? Okay, well, they weren't able to hold the 15. We're coming back now, but I'm pretty happy with how that worked out so far. Should I add? Do we come back down here? Actually, I think I probably could add below 14, but I think in this situation, if I do add, I want to wait a little bit, because there's a really strong probability that we form a hole here and kind of get stuck for a while, right? Say about 2/3 of the selling came back out here, so okay, so I can see that Zero Hedge also has a story about Schumer and Jeffries. Goldman 1 Delta Boss notes retail is being tested. Supreme Court to decide on Trump's tariffs. Do you think that when we get headlines about how the arguments in the Supreme Court on the tariffs went today, that those will potentially be market moving? I think they could, because if the Supreme Court rules against Trump, because ultimately I've always felt that it's an abuse of the law about whether Trump can really issue tariffs on his own. I don't think that that's the way that things were intended to be used. But if the Supreme Court were to overturn that now at this point, and especially if they were to require the government to pay back all of the tariffs collected, that would be such a disaster. I can't even begin to wrap my head around how bad that would be. Right? So what does the Supreme Court actually do? I think that they would make something more like, well, it's okay that you've done it so far, but going forward, you're going to have to adjust or, do this or that. Like they're going to have to make, they're going to have to hedge it some way. They can't just go all out. Yep, that was illegal. You shouldn't have done it. The tariff is now void and you have to pay them all back. Even if that is maybe what should happen legally, I don't think that the Supreme Court can actually do it because it would be such a disaster for the country. So, again, the question is, it's a big deal. So the question is, will headlines just about like this argument was made and this justice seems skeptical or whatever, will even reports like that move the market today? Because it could. I'm liking that tick back up there. It must be forward-looking compensation, I feel. Okay, what would be forward-looking compensation? I think I mean, that sounds interesting, but I'd like to know what that would actually look like. Because that is not something I've heard before. I mean, I suppose you could say you have to pay all the tariffs back, but it hadn't happened over like a long time period or something. I don't know. So here's the thing. Oh, wow. That came back up quick. Did you see that? I mean, when they took the 15 with the 3,000, I was like, okay, that's pretty good. But then they immediately took 3,000 at 15.5 and pushed it up again. I'm feeling pretty smart right now. I mean, really, we owe it all to Uzi, right? This really was like a key missing element, because there's so many times where it's like, is it going to go further or not? That's the real question. And I think this is a really, really significant development. Ergo, it should push further. And then it doesn't. And it's like, why does it do it in this one and it doesn't do it in this one? And understanding the positioning relative to what the market is pricing for volatility is the key there, I think. We small brains can do big things sometimes. Yeah. Well, but it's not even, yeah. I mean, the thing that's so weird about what we've learned about market microstructure and complexity and all of these things, because those are things that really take big brain to understand. I certainly never would have figured all of that stuff out on my own. I read it, I feel like I understand it, but the people that discovered these things are true geniuses. The real like 135, 150 IQ plus type of people, right? And I've never taken an IQ test, but if I have a good IQ, it's probably like 110 or something, I don't think I'm that brilliant, but kind of what the data suggests is that the simple thing, the humble thing, ends up being correct a lot, counterintuitively, because it's so complex, and we as humans can't handle the complexity, so we have to use bounded rationality instead. We use heuristics and things like that. And this volatility projected range is a heuristic like that. It's exactly the sort of thing that we should be looking for, you know? And you have a good reason to think that the levels would actually matter, you know? It's a way better premise for things than like fair value gaps, you know? Like, I guess what I'm trying to do here, and I don't think I understand what the best way to present it would be, but I'm trying to explain why a volatility projected range is brilliant and a fair value gap is brain dead stupid. Now you just have to figure out how much the market will give you in the green before it craters back down. I know, right? That is exactly what I'm thinking. But I would say that kind of shift where we took out 15.5 and 16 really quickly, on one hand, makes me a little bit nervous, to be honest. Makes me a little bit nervous. But also could be, well, actually, I think I'm gonna take it off at 15.5. I was just double checking. I like had to ground myself for a second. I said I want to see the cumulative delta come back out. Well, we have recovered the cumulative delta at least since the news, but there was some selling before that as well. So there's probably another 10K that could come out. But given the liquidity in the market, another 10K might only get us to like between, it puts us in this next range, 15.5 and 17, let's say. Or let's say 18 because the volume profile is kind of low right there. Okay. So I'm going to take it off at 15.5. I feel pretty good about that trade. What's the definition of fast? You mean when I was saying when they hit them? Like, it wasn't just that it was fast. It's like in the treasuries. If you see a level get taken out and then they immediately take out the next level with a decent, and it's a decent chunk. Like, that's another thing is like, if you clear 15.5 and then you clear 16, but it only takes 500 contracts to do each one of them, that one is, that can be concerning. Although it's very contextual, but that basically means like market makers are pulling out of the way on that one, right? But when somebody is just gobbling it up, 3,000 here, you got another 2,000. That says to me that there are some big players out there like covering positions or for whatever reason buying, but that they did it so strongly in that spot that this is likely to start becoming another distribution. Oh, yeah, okay. I missed the context for his comment there. Fair value gap is just because the market made a fast move. Doesn't it kind of just... really, it does. I think you're right. Like, well, so a fair value gap could be multiple things, though. You know, like this is another issue I have with a lot of technical analysis, is they say, here's this pattern, and this pattern means X. But when you look into the order flow of it all, you will see that it could happen two ways. There's one way that a fair value gap could happen, which is that is an area of low liquidity that they just swept through very, very quickly, right? But it can also be a place of relatively high liquidity, and there was just so many market orders that they just plowed right through it. And both of those things kind of mean different things, and I think that you have to think about them differently. And whichever one it is, in this case, I would say, well, it was a news event, but it was accompanied by pretty strong volume. There's other context in here that changes it. It was a news event. There was front running before the news. We plowed through critical options levels. Like that all, I think, kind of, you factor it in. But ultimately, the whole idea behind a fair value gap, like where it is just kind of a coincidence. And what will happen there and after is not really consistent. So I really think that the whole setup is nonsense. Let's see here. Longer term directional move could also mean a fair value gap. Didn't think of that pathway. And another issue I have with a fair value gap is quantization. So like you could, if you were to take a one range chart, you could have something that did this the whole way down. But when it actually traded in the 1 minute candle, it just did this, right? So you got the fair value gap. There's things that happened inside the candle that you can't see. And if you moved them over 30 seconds, the fair value gap might just completely disappear. And that's what we call quantization effects. That basically, because we're taking samples like at the beginning and end of a 1 minute period, and when you change that period, how does that change? Because the reality is that the market is continuous. So it's not work in 1 minute intervals. We don't, it's not a Walrasian auction every minute, right? So, and there are some interesting kind of statistical effects from quantization and methods to figure out how much the quantization matters and cancel them out. I think I'm still too lazy to go and do it, but I think that there's a lot of things in today's stream that would make good highlights, yeah? I still need to work out how the math on your indicator is so different from mine, at least on the other treasuries. We're even on ZN, but everything else is off. Your indicator has wider ranges. Yes, that is interesting. It is grabbing the other treasuries, the levels correctly, though, huh? Well, do you have the version? Does your version print the number?
Block cell.
Okay, yours does print the number. It's a much wider for ZT, but very accurate today. Yeah, I don't know. It is curious. Although it could just be rounding errors, I suppose. I don't know. Like, especially in ZT, I'd have a hard time seeing it being off by more than like 1 or 2 ticks. Well, now would probably be a pretty good time to come in and read about the ISM number. Put it this way, for my math, we're way outside the projected range. I have to say, on ZN, it's worked pretty good, huh? But here's the interesting thing that it's done in ZN that is probably just a coincidence, but it's worth noting. Maybe we see it in the future and it's a pattern and it actually is a thing. But do you notice that they got stuck between the extended and the regular range? And then here again, they're doing it again. That is fascinating to me. I mean, doing it twice also seems a little bit like, Because by the way, for the inventory cost basis, which also tends to be pretty good in these instances, but like here, right, the line is so far away. Like this is a situation where we've been trending down so much in ZN that these lines are not as useful. Although if we get like a full-on pullback, I mean, like this is just the tiny pullback, and I think that the tiny pullback is kind of what we want. I could have waited. I didn't have to take it off right when I did at 15.5, but it does look like that was the spot. But if we get a further one, then that line might be really helpful as a target. But that indicator is not as useful today because it's trending pretty far. But here's a case where, like, because I've said before, like, I think that you got to be careful, like, when it's trending, you know, they're just going to blow right through those lines, right? But really what it is it's whether the volatility pricing in the options is high or low. And what we have is it's low. It's really low. And so they respect those levels more. Even on a trend day. It's kind of funny because you can just kind of think of these things as like, what would cause a quantitative algorithm the most trouble? And that's the way the distribution tends to go. Typically on my end, the ranges are solid. I've had a couple of days of blowing them out, but usually they stay within using my math. Yeah, so that's just weird. And the issue is that you're going to have to go through like all of the interim calculations and see where their methods are different. Although I have the spreadsheet, right? I don't know. We have like 30 minutes. I don't think I have enough time. Do I have something going today? I don't think so. I did have one company call me back and wants an on-site interview, so that's good. It's kind of... Anyways, one of the things that I hate is when you've got multiple jobs interviewing at the same time, and there's one that you would clearly want more than the other, but you don't know in which order they'll come back to you on, and you're worried that like maybe they'll both want to hire you, but the one that you want comes later and you've already accepted the first one, and then what do you have to do? Renege on the company that you already just said that you were going to start with? But it's never happened. Never come to that. I remember what I was doing. So yesterday I was improving my Kubernetes cluster. I installed Argo CD on it. I set up a repository for it. I set up a ping test. You can, and I want to run that through like, well, I don't know. Maybe I use New Relic, something like that. That will just regularly check that once a minute, so that when my cluster goes down, because it seems that because of the hardware that I have, and especially the drivers on the network that is built into it, that it eventually poops out. Like, it can't last months and months and months and months. It will restart. So you have to know when that is. So I need to set up an alert. I need to set up an external monitoring that will hit that endpoint. So we get that part. And then I added Git, which was kind of funny because I hadn't heard of it before. But then actually I had heard of it. It's just I'd never seen it written out. Because I thought it was Gitea. Because it's a Gitea. And then when I was watching a video or something like that, and they said, here's blah, 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 Git. And I'm like, oh, it's Git. Oh, of course. So anyways, I got Git installed. And I got the GUI on that. So I think I need to do some things to like make it like have like a dynamic domain and everything that will point to my network, but then so that I can share the code with collaborators, essentially, and have it still be private and not have to pay GitHub. So we'll probably finish up that project today. I'd say overall this week has been going pretty good. We got a callback. We made a good trade. We made good progress on the GUI. We made good progress on the infrastructure. So, I'm just now noticing. Yeah, I don't do a very good job of keeping track of every instrument. Look at this. Oil is moving. Now, price and cumulative delta are not correlated. So for the way that I tend to like to do things, that's not a trade. But I do think that that's a warning. Like, they are buying the oil. And they were doing that yesterday too. Here it was yesterday. Yesterday was kind of, they were correlated, right? Yesterday it was a good move. When you start seeing that in oil, that's, you gotta take note. Like, strong autocorrelation in cumulative delta in oil tells you something's going on. Oh, did we come back down to 14? Man, I am really glad that I took 15.5. I really caught it well. I feel like that's a trade that we did today that like a situation that you'll run into a lot, that we can probably try playing many times. Oh, so I was going to read the services story. After yesterday's mixed picture on manufacturing with PMI up and ISM down, analysts expected both surveys this morning to show an upward bounce. S&P's services PMI disappointed but did rise from September's 54.2 to 54.8, but that was less than expected and less than the 55.2 preliminary print. ISM services PMI beat expectations, rising from 50.0 to 52.4, well above the 50.8 expectations. And this is happening amid a rise in hard data, though admittedly based on housing and marginal labor data given the vacuum since the shutdown. Across the PMI surveys, only ISM manufacturing saw a decline month over month in October. Under the hood, prices surged to their highest in 3 years, new orders expanded at their fastest pace in a year, and employment improved, although still below 50. October's final PMI data adds to signs that the U.S. economy has entered the fourth quarter with strong momentum, according to Chris Williamson, chief business economist at S&P Global Market Intelligence. Growth in the vast services economy has picked up speed to accompany an improved performance in the manufacturing sector. In total, business activity is growing at a rate commensurate with GDP rising at an annualized pace of around 2.5% after a similarly solid expansion was signaled for the third quarter. While growth is being driven principally by the financial services and tech sectors, Williamson says the survey is also picking up signs of improving demand from consumers. However, the surge in prices paid is having some consequences. There are signs that new business is coming at the cost of service providers having to soak up continued high input price growth to remain competitive. Customers are often pushing back on price rises, especially in consumer-facing markets. While good news in terms of inflation, this lack of pricing power hints at weak underlying demand and lower profits. Yeah. Ooh, we've got to talk about this, and this is happening in China. Business expectations about the year have also fallen sharply and are now running at one of the lowest levels seen over the past 3 years. As Williamson notes, signs of spending caution from consumers is accompanied by heightened political and economic uncertainty. However, Williamson points out that lower interest rates have helped offset some of the drags to business confidence, for which the October FOMC rate cut will have likely helped further. Treasury yields are on the rise and rate cut odds are lower. Hopefully, we will get some hard data reality, payrolls and CPI if the government opens before the next FOMC meeting, but for now, we would say this should not be weighted enough to warrant the Fed veering from its easing path. Except for that the Democrats do want to negotiate. So they're heading down for the lows again. That's going to be interesting. I think that they still, like in this situation, sometimes they'll be like a little push further, but then they still kind of come back up and settle in that same area. So that second play is usually not as good. Another thing that we have to factor in with that trade that we took was that I didn't necessarily get the best price and I averaged into it. I used multiple contracts. So that's also an important thing to know. Multiple contracts, and if it had failed, I would have really taken a big loss. So maybe I need to work on getting the right spot a little bit more. So I'm really interested in the political commentary following Mamdami's win in New York. Let's see what happened on CNN. CNN's expert political panel gloated in victory as conservative commentator Scott Jennings issued a blunt warning to the Democrat Party on Tuesday night. The results are in, and it's official. New Jersey and Virginia elected Democrat governors Zohran Mamdani will be the next mayor of New York City, and arguably worst of all, Jay Jones, the Democrat wishing for death on his political opponents and his children, won Virginia's attorney general race. The wins of Mamdani and Jones in particular, Jennings called a terrible image for the Democrat Party, one he warned would come back to haunt them. You own this now, he said bluntly. Jennings' warning began with Mamdani's win when he issued this message to Chuck Schumer. AOC is going to be the next senator from New York. But the real warning came when he shifted his focus to Jay Jones. I see the energy in the Virginia Democrats looking the other way on a violent candidate for attorney general who says he wants to murder Republicans and their children. If you think you're getting rid of Graham Plattner in Maine now, think again. This is a terrible night for the National Democrat image, given what's happening inside their party. Jennings continued, Mamdani is an avowed socialist. It's not what people say that he is, it's what he says that he is. He's now the leader of their party. That's their energy and Chuck Schumer's. Anderson Cooper cut in, mocking the idea that Mamdani is the leader of the Democrat Party. Who's the leader? Can someone tell me? Jennings shot back. He's a life raft for Republicans who have to go on TV and get their butts kicked. David Axelrod responded with a big smile. Even as the panel locked him off, Jennings doubled down on his warning about Mamdani and Jones. You own this now. You all own this now. Okay, but here's the thing. There is this issue with having specific language around different types of economic policies. Social Democrats supposedly still think that you should have markets and economies and things like that, but that the government should still participate strongly with having things like strong safety nets and things like that. Social services, socialized healthcare, right? They are not straight out socialists. It seems to me that the people in the United States that run under the Social Democrat Party are just in the Social Democrat Party because that's the only place to be, like, where it's like reasonable, you know? Like, if you actually join the Communist Party, then you're a pariah. But that they actually are communists. Like, because they always seem to veer in, like running, city-run grocery store, that's socialism. That's straight up socialism. It's like, yeah, other grocery stores should still be able to be there, but if you can't compete, you're gonna get run out, right? And to be honest, also, like, socialized healthcare, that is socialism as well, but that's kind of like a special case because we have found it very difficult to have like a real market and especially a balanced market in healthcare spaces. So is Mamdani like a real socialist? I'm not sure. I do know that some of his policies are dumb though. It's just... And at the end of the day, and this is the issue, I have to bring this one up every time. You got to understand that some of the stats and like things that people bring up on this are like incredibly misleading. You ask Americans, do they want socialized healthcare system? They will say yes. But then if you tell them what has to happen to make that happen, they say no. Like when you give them the consequences. So they think, the Democrats think, oh, socialism is what America wants. But actually, Americans just don't know what you're saying. Americans like social programs. They don't like socialism. Right? So, if what your party is a socialist party, or at least your policies are socialist, because I don't think Social Democrats are supposed to be socialists, but I digress. Americans will reject that. And like when you have an actual like election around it where everybody gets the opportunity to make their case and everything, like especially for president, The Democrats would lose that one every time. This could very well backfire for the Democrat Party if he fails to make ordinary New Yorker lives better. Varag says, come on, he's just a puppet. I think you're giving him too much credit with that one. It seems to me like he is just a kid that somehow found his way into politics and really doesn't know what he's doing. I mean, it's kind of frustrating. I don't think that I would make a very good mayor, personally. Maybe I'm wrong about that. Maybe I will have some experiences in the future in some leadership capacities where I say, actually, I'm pretty good at that mayor kind of stuff. But I do understand how the economy and these complex systems work, right? So you have this issue where where the kind of person that's actually good at like making all of the coalitions and doing all of the things to be able to get into power and to keep everybody happy doesn't understand anything about how to actually make good policies, because it's an issue of complexity. So, I don't know. You're mispronouncing Hewa's place there. Come on. No politician gets there by himself. What are you talking about? You're talking like that is somehow some sort of aberration in politics that doesn't usually happen and shouldn't happen, when that's always the case. I tell you how this works is you've got political parties and groups of people that are like power brokers, and they're constantly looking around for new talent in their party that they can have run in certain elections. And they find somebody that is very charismatic or whatever, and they'll say, this guy is special, and they'll start putting their backing behind him. They'll start training him on how to run a campaign. They'll start funding campaigns. And, you start at the bottom. You're going to be like, a local politician. Like maybe you just run for your city council or, and then city mayor and then county mayor and you work your way up. And it's always like that. That's the way it was with AOC too. She got involved with these Social Democrats of America and they liked her and they pushed her. The concerning thing here is that there are enough people that actually believe in Social Democrat policies or are duped by Social Democrat policies for it to affect a city like New York. But again, like if they really do the worst of them, I mean, if he does things that really hurts the exchanges and causes all those businesses to move, or if like people can't eat in New York, they'll find out. They'll change it. Well, what was I reading that got me on that? I don't even. Oh yeah. That is the sim. You'll own this. Yeah. Well, the grocery store. One of the things that's funny is that when these things fail, the media does their best to just like never talk about it. But with New York, it's not. You won't be able to avoid it, right? Like if in New York, all of the bodegas close because Mondami's city grocery stores are a complete failure, they're not going to be able to run away from that one. Just go eat at Subway. One of the things that I thought was so wild in New York is like if you go to a local restaurant, right? Even back then, you go to a local restaurant, it was like $15 to eat. Okay. But if you went to Subway, it was still $5 footlongs. Like the national chains didn't have the New York prices. So what I'm saying is if the grocery store problem is a problem, go eat at Subway. until they run out of food too. Let's see here. My father said layoffs were worse in 2024 and 2023 than 2025. Stop panicking. I don't think that's true. I think that there's been a lot of layoffs in all 3 years, but there's been a lot of hiring as well. So it hasn't led to a quote unquote recession. And if the thing is we're saying we think that there will be a recession in 2026, man, that's a really difficult one because everything that I see screams recession. But then when I look at the numbers and I game it all out from that perspective, not necessarily a recession. Period of weakness, we get through it. They get the government shutdown ends. Maybe depending on the data, we cut interest rates one more time. I think it could be okay. It's just there's this uncertainty of have companies already started slimming down so much that you can't stop it? And I'm not convinced that we're at that point, but that would be kind of the key point, right? So you could say like 30% chance of a recession or something like that. I saw a video from some pizza guys that were selling $42 pizzas complaining that they are in debt. Meanwhile, he was wearing a 24K Rolex Pepsi that you can, oh wow, that you can't even buy at or authorize. Well, you can't buy anything at the Rolex. They've got this thing going on where it's like, we'll only, the top pieces that everybody wants, we're giving those ones to customers that have already come to us many times before. So you have to buy like a cheaper piece first. They play in that whole game. The watch, I tell you what, man, you want to see some fireworks, like some internet drama. Go and talk about Rolex on watch enthusiast forums. It's wild, man. They get so passionate about it because most of the watch geeks hate Rolex now. Simply because of that. And the crazy thing is that like before COVID, they weren't that expensive. Like you could get some of these Daytonas for like maybe $15,000, and now they're like hundreds of thousands of dollars. It's so crazy. IBM to cut thousands of workers amid AI boom. I really think that another point here. I really think that AI is negatively affecting the job market. Not because AI is effective at automating jobs or that companies are getting an actual return from AI, but rather that it is crowding out the investment capital. All of the capital that they have that they could invest in employees, they're investing it into AI and compute right now. And I can only hope that, I hope that ends in the worst way possible for those companies. I hope that they get royally screwed. Eventually, this point comes where they realize they're not getting a return from it and they bail on that position. Oh, it will be such a glorious day, folks, when that happens. I hope it happens. Because we need to invest more in our workers. We've got some issues, especially in the tech industry, right? Like when you look at, okay, like most people are employed, but they aren't necessarily happy with their jobs. They don't have good, secure jobs that I think we can do better for them. I would really like to see more empirical, peer-reviewed research about agent-based models as it relates to the job market and things that we can do to improve the job market for people. The government shutdown is now the longest and likely the most damaging in U.S. Yeah, probably. Polls shows 47% of Americans see a large U.S. trade deficit as an economic emergency. Well, I guess that is relevant for that Supreme Court case, right? I can't. I really don't think that the president should be able to enact tariffs himself, but he did it, and it happened, and I think it'd be a bad idea to roll it back. From r/Fatfire, I finally bought a Ferrari, but I'm too shy to drive it. See, that is exactly why I don't ever see myself buying a nice car like that. I could see myself getting a Lexus. Maybe even the really big Lexus that everybody wants and has a 2-year waiting list. But not a Ferrari. Because it would attract too much attention, yes. All right, guys. Do you like today's stream? I was trying to lean into it, you know. I feel like that you guys liked it, so it was a good stream, and I enjoyed that trade too. I think I learned a lot on that trade. Like, there's something about executing it that really burns it into your brain. So I think that I'm looking forward to future opportunities where we can do that, because I don't think that the play is to play the bounce every time. Although right now it's probably better. Well, I think that's all we got time for today. So I will see you guys tomorrow. Tomorrow's Thursday, right? Thursday. Okay. In the meantime, stay excellent.